Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Well, welcome, Art Jarvis. We're back, Taking Stock, episode number 48. Now, I always ask you, as I welcome you, how are you? But I have a little bit of a twist on that today.
Okay.
Have you caught your breath yet?
Oh, yeah. I try not to get too winded over this stuff. But, it's been more than interesting. But, my general response is fantastic. And in spite of the fact that today is tax day. So
right, here we are, Tuesday, April the 15th, as we record Taking Stock episode number 48, Tax Day 2025.
Yes.
What a great day to talk about the economy and people's investments. Hopefully they're not going to have to dive into their 401ks to get money out to pay their taxes or something.
It depends on who they are, but yeah, you're right. Definitely not going to let them get in their 401ks to pay their taxes. So.
Well, and a side note on that, if I have it right, if you dive into your 401k to pay your taxes, you're adding to your taxes because there's a tax penalty for diving into your 401k at the wrong time.
And don't forget, then you're paying taxes on your taxes.
Beautiful.
So that's a good reason why people sometimes have bad things happen, and they need, maybe they have to dip into their IRAs or something like that. And those are conversations we have not too often, but more frequently than I prefer. But we try and go through a process of finding any alternative possible from dipping into your IRA per se, especially if you're not 59 and a half, because then you got to pay a 10% penalty, right?
Right.
So if you can avoid that in any way possible, then that's the goal. But unfortunately, life comes at you fast sometimes, so you got to do what you got to do. But
Fast and furious, and fast and furious are the two words that go with. We were talking offline for as you're listening to this, Art and I always have a little chat before we begin recording. And we were talking offline, and you said, Fast and Furious last Tuesday, so 1 week ago, if today's the 15th, so the 8th of April was, in your own words, the craziest day you've seen in the 35 plus years.
Yeah, we're heading toward 40 years in this career, and Tuesday was easily the craziest day I've seen. And to set it up a little bit, Monday. So that was Wednesday, wasn't it? Actually, I did say Tuesday, but I think it was Wednesday. Not that it matters, but
Well, Tuesday was the 8th. Wednesday was the 9th. It doesn't matter. But if Wednesday was the crazy day, okay, we stand corrected.
Then I made the mistake. So, but Monday, they came out and there was fake news, supposedly, that Trump was going to do a 90-day, I use the word reprieve, on the things. And we went from a market that was down about 3.5% to very quickly the market was up 3.5%. And about 5 minutes later, I'm walking into a building, I look, and we're down again. And I'm like, what is going on? This kind of, and for that I'm thinking, wow, that's volatile, right? And then, of course, but then I was determined that no, the White House came out pretty quickly and said, no, we're not doing a 90-day reprieve. And then Wednesday, I'm driving home from a meeting from Kentucky, and I'm looking, I've got the phone up on the dash, and we're up about 0.4%. And usually when you see the market moving, if things are volatile, it might jump 0.1% or something like that. But we went from up 0.4% to up 1.1%, and then up 0.75%. And I'm not talking about gradual; these were actually the next tick.
Yeah.
Right?
Bounce.
Yeah, and I'm looking at it, like, wow. And the next thing I know, we went from like 0.75 up 0.75% up 2 something, and then back down. And the next thing you know, we're up 3%. And the next thing you know, we're up 5%. And I actually called my son Austin. I said, "Hey, what's going on?" I'm like, "You seeing anything?" And at that moment in time, there wasn't any news or anything. But about 2 minutes later, they came out and said that they were going to do the 90-day reprieve. So fake news quickly became not fake news. And but the craziness is,
we'll say fake became fact.
There you go. Yeah,
just to put a clarification on it.
Yeah, that or the news leaked out a little early, and it always was fact. But I can't speculate. But yeah, I mean, then the craziness. I mean, that was kind of a new thing. That's a lot of volatility. We have had a substantial amount of volatility over the last few weeks, but that Wednesday was the epitome of it. But the crazy thing is the S&P 500 finished up almost 10% that day.
Right.
The NASDAQ, the smaller cap side, they finished up over 12% that day. I mean, that's just a huge move, and honestly, especially to the upside, I don't remember any day that was ever even close to that. Especially on the upside, we've had some pretty bad down days, historically,
right.
From a percentage basis. But like the day the markets opened after 9/11, we were down very quickly, 7.5% or something like that. So even this day, you look at a 7.5% downturn because of 9/11. You're looking at a market in one day just because the tariffs got a 90-day moratorium. I guess that's the word I'm looking for. We're up 10%. We're up 12%. You're just saying. I'm shaking my head. But I guess. And in hindsight, here we are a week later. The market has actually calmed down. And we've had,
which is why the opening question was, so have you caught your breath? Because it was just, you mentioned the volatility. Well, so much volatility that, and listeners know this because they tuned into the special report that we did. We did a regular Taking Stock episode 47 on Tuesday, and on Friday, you got a message from me, said, "Hey, Art, do we need to do a special report?" Because it was just total madness. And I like the way you put it again, offline today beforehand. That was the calm everybody down without using any words. Calm your sweet selves down.
That's what I said.
Calm your sweet selves down. Special report, because oh my gosh, the tariffs and the threat of tariffs, and it just went completely into the toilet on that. It was I was kind of freaking out. Like, where are we headed with this? So the calm your sweet selves down,
right?
Which brought us, and thankfully, as we said then, that was a Friday, so there was Saturday and Sunday for people to actually take a breath, and then Monday, as you said, it's interesting. I want to touch on this. Was it fake news, or was it fact that just hadn't come to pass yet?
Right.
Well, you may have heard there was headlines after the 90-day reprieve was announced. There was some, social media headlines specifically, but from real news sources like, whoever, CNN and AP especially, the Associated Press stories. Did Fox News influence Trump and change his mind on the tariffs? So the little leakage of, maybe there should be like a 90-day reprieve or, a 90-day moratorium that was maybe floating out there on Monday became fact on Wednesday, and people speculated that maybe, Trump was watching, the news and got convinced to change his course.
Maybe that's not a bad idea.
Influencers, actually.
Yeah.
Real influencers influencing the president's policy making. What do you think about that?
and you know what you're doing. But I will always say I will, and I will always continue to look at things from an economic standpoint. Okay, and that's why you asked me if I caught my breath. Honestly, I never lost my breath.
Right.
It's like I am not near as worried about what's going on right now as many people are. And I mean, there are literally people panicking and they're selling out their entire portfolio. I can't imagine having sold out my entire portfolio a day or two before Wednesday and then the market went up 10 or 12%, right? I mean, that's talking about an insult to injury. But yeah, to answer your question, I truly hope that the news outlets and social media are not influencing our world leaders. I mean,
right.
I'm not against expressing our opinion about how things are going, but if it was a good decision before, I don't care what Fox News says. Okay, it should still be a good decision. Right now, you might need to tweak things. I mean, nobody's perfect, but I just I look at what's going on. Again, I'm not happy about what's going on. I'm not happy that as of last Monday, we were down, the market was down almost 20% on Monday morning. That gives me no joy, especially because I don't think we should be there in any way, shape, or form. But the way I look at this is or what really concerns me is the unknown. And when I say the unknown, it's the thing that you don't even see coming. Okay, when you see something coming, we talk about it and we analyze it ad nauseum, right? Y2K is a perfect example. We beat Y2K to death for 2 years, right? So when January 1st of 2000 rolled around, it was taken care of, right? So that was fine. There might have been a few outliers, but it wasn't the utility companies and things like that, right? So, but it's the things that are, or 9/11. 9/11, we didn't see 9/11 coming, or the pandemic in 2020. I'm going to say we didn't see that one coming either. And those are the things that are more damaging. But
well, I want to ask while we're on that track though. So there was 9/11, and then you just we jumped all the way forward to the pandemic, which nobody could have seen coming.
Right.
What about I'll call it the banking / mortgage crisis of 2008?
Yep.
Was that like foretold? Were people seeing that, talking about that, or did that kind of come as like nobody foresaw that either?
I don't think people didn't foresee the severity of it or the impact of what was going on in our financial sector and with that impact, how that would work its way through not only the U.S. economy but the global economy. So we lost 55% in 15 months. We lost a couple of big financial firms, Bear Stearns being one of them. Right. They disappeared.
Right.
But we were invested.
Well, I remember. It seems like, and I hate to say this because I hope I'm not wrong, but it seems like there was even is Goldman Sachs going to come out of this at that time? It's like there was, when you talk about big firms, and it's like everybody knows some of those names. Yeah. And I have this vague recollection of you can't be serious. How could Goldman Sachs be maybe up against the wall on this?
Too big to fail. Guess what?
Right?
Wrong. You can fail.
Well, so here's the other question on that, and I'll let you get back onto the point. But is that something that, because it happened, the way it happened, and how we came out of it in 2008, that now there are things that are better in place, that the odds are strong against that ever happening again? What do you say?
I say nay. And here's why I say that. The problem, and what I've made a career of, is people make the same mistakes over and over again. Okay, now it might look a little bit different, but one of my favorite sayings is, "Well, it's different this time." Well, my favorite saying is, "No, it's not." Okay, people just consistent investors, traders, consistently get out at the bottom and get back in at the top. Right? When you have that final capitulation, Well, guess what? That's when you should get in. When it feels the worst, that's when you should get in. And if you're feeling really, really good and things are going great, you probably should start taking some profits. Okay, but yeah, it's and the problem with 2008 was people were investing in things that nobody understood. Collateralized mortgage agreements, completely in tranches and kind of thing. People were buying things because they were paying great dividends and great yields. Well, the problem is people didn't understand what they were buying. And when the house of cards started falling in, it was bad. And I can't remember the gentleman's name, but from like the movie The Big Short or the book The Big Short. I mean, he understood it perfectly, and he kept investing based on this, and he literally lost billions of dollars on his bet that he was making, because the problem is the people who were valuing the collateralized mortgage agreements, they weren't giving an honest value on them. So when he thought they should have dropped 50%, maybe they were only down 10%, and he's pounding the table that this isn't right. Well, guess what? Finally, the whole house of cards fell in, and he was right to the tune of about $500 billion. So he ended up being very right. But the problem with that is people didn't understand what they were dealing with. But to answer your question a little bit better is, for at least a couple years before 2008, you're looking at the economics of the United States and things and going, this doesn't make sense. And when you're sitting there, I'm trying to find new companies to buy, and I'm having trouble finding companies that I believe are a good value. But that's the market telling you that something's not right. Okay, or we're ahead of ourselves, and sure enough, we had an adjustment. So, that in my opinion, excuse me, that in my opinion, that is something that could be seen coming. Okay, and I talk to my clients a lot. Like, one of the things we try to do at Jarvis Global is, we want to outperform the market, but we want to outperform the market with less volatility than the market. Okay, so we want to try and do a decent job of protecting the client some on the downside. So if the market goes down 10%, if we only go down 5% or 7%, that's 2 to 5% or 3 to 5% that we have still working for us when the market comes back up. And if we can at least match the market or do 105% of the market on the way back up, we end up outperforming the market with less volatility. So again, we can see some of those things coming, but again, 9/11, couldn't see it coming. The pandemic, somebody literally walked in and turned the world off one day.
Right.
And you can't. And then what does that mean? But
on the pandemic note, it's like there's always that little thing before that of the potential of a pandemic. Mm-hmm. And at the same time, I think me and everybody else, you and everybody else like us, was thinking, but a pandemic never really happens. They make movies that are very sensational, spectacular about a pandemic. Right. So, nobody saw that coming. No. Nobody saw that coming. And we still don't know, personal opinion at least, we still don't know the truth of what happened. And some of what we think is the truth now is just really a sad story of politics. Yeah. And if that ultimately is the truth, that hurt a lot of people, and people died on some political nonsense. Yeah,
the world was definitely in turmoil for at least several months.
For sure. But I do want to clarify this just for people who are listening. Chuck doesn't think that the pandemic was a fraud or a fake. Right. People did get sick. It was a real thing. The question is, what was the root of it? And then the question also becomes, if it was politically motivated, that's a really, really sad story.
Yeah. I mean, what it did to us socially is the problem, in my opinion. You had elderly parents in nursing homes and people in the hospital, and you weren't able to go see them. And there's the potential that you were never going to see them again because you weren't allowed to walk into a building to go see them, right? Social skills, children's social skills. I mean, children, they're still recovering, and I'm not an expert on this anyway, but some of the stuff I read is like you're talking about a full cycle of 10 to 12 years before kids actually kind of get back to, well, I'll use quotation marks, normal. Or pre-pandemic, the way they behave and things like that. So, that's the you take away the economics of the situation. It's from a social standpoint. It was just ugliness.
100% agree. Social, and the idea that those, especially the school children, that suffered that social change. The idea that they'll actually recover, in like 10 to 12 years, that socialization portion of their life is just gone.
Right.
It doesn't mean that they won't, socially adapt down the road, but that part of, you and I had that part of our childhood. Yeah. And it was, a social norm. Yeah. That they missed it. Yeah. Sure. And whatever those ages were, I'll just say the 5 to 18-year-olds that would have been in school. So for those, really, we'll say that the, COVID was like essentially, we'll say 2 school years. I was going to say 3, but 2 school years. Yeah. That were just turmoil, topsy-turvy, a totally different potential learning environment, or in this case it wound up being somewhat a lack of learning. That's what the educators say, that's the impact. But social, I agree with you 100%. It's the economic impact is the economic impact, but the social impact was huge. Right. From, like you said, from the elderly down to the children. Maybe those of us in between those years, it was a little bit less impactful. But still. Yeah.
And then, you look at it from, then you this is a financial show, so, you look at it from an economic standpoint. And so 2020, and then we pumped $6 or $7 trillion into the market to try and fix the economy that we messed up. And even worse is then, we kind of bring things back to, again, I'll use those quotation marks on the word normal, but then we just did an atrocious job on the inflation front. And look how much damage that inflation in 2022 has caused us, right? And again, unless something really bad happens in the world, those prices aren't going to go back to pre-2022 levels, right? And I think that begs the point a little bit on what we're dealing with now is that kind of inflation is, you pump $6-7 trillion in the market. It's not a short-term thing. You can't just put 6 or 7 trillion into the market and go, okay, we did what we want to do and just pull it right back out. Okay, there's the multiplying effect of money and things like that. So, as opposed to like not a 9/11, but a Gulf War, or maybe what I think is kind of going on now with the tariffs and things is, it's a short-term event where it knocks us off of our economic trends, but if it ends up being a short-term problem that gets fixed relatively quickly, typically the markets come right back to trend very quickly. And that's what happened during the Gulf War. The Gulf War, obviously we took a major hit, but then as soon as it looked like, oh, look, this is going really, really well, for us over there, then those economic numbers that had dipped actually kind of came back to the exact same trend that they were on before the Gulf War. That's exactly how I kind of look at things right now. The major question with the tariffs is a timing question. Is this a short-term event that's going to get taken care of in a period of months? Or are we going to drag this out and keep punching each other in the nose for the next year or so? And if it is a year or so thing, then it could be inflationary and it could have more lasting effects on the economy. As opposed to if it's a short-term thing, I think we get it taken care of and we come right back on the trend, and all this damage that we've done in the equity markets and things like that comes back pretty quickly. And that's my concern with getting out of the market or whatever is, especially like a day like Wednesday. I got you out of the market and the market came back 10% the next day. That's for me, that's a bad day. Okay,
Right.
That'll irritate me to death. So and it's kind of and I actually saw one of the Fed governors bring it up this week. I was like, there you go, someone's actually talking about it. But the idea of transitory inflation or temporary inflation, and this Fed governor, who I will say used the exact same terminology back in 22, and we know how well that went. But again, I tried to make the point that was a different scenario in 2022 compared to what we're dealing with right now. Okay, right. But you brought up the concept of that it actually being a short-term thing, and kind of what I was just discussing or whatever. Excuse me again. But yeah, does this end up being a relatively quick thing? And the other thing I really haven't seen people talking about is, don't forget, companies and countries and things are not just standing there taking the punches, right? I mean, you look at a company, let's just say Procter & Gamble. Procter & Gamble is a huge company, and it has ways of working around things. They'll figure it out. Okay, so if all of a sudden their supplies or something, their costs of goods is starting to increase at a substantial rate, there's things Procter & Gamble can do to alleviate some of that, right? So, and I have seen very little talk of that. That we're as a human race, we're pretty light on our feet, right? So,
sure.
If something bad's happening over here, let's try and move over here and come up with a better alternative until that changes, right? So there's a whole lot of things I think can happen on the inflation front or on the tariff front. The best one for me, and it's obvious, because Wednesday, again, we jumped 10%, 12% in the markets just because we took away the tariffs. All of a sudden, we've got half of what we lost over the last month or so. We got it all back in one day, or half of it back in one day.
Well, there's good and bad in Chuck's opinion on this, and you can correct me again if I'm wrong. Good and bad. So, took the tariffs away. The 90-day moratorium, reprieve, whatever. Took a step back, and the markets rebounded and people's confidence. And that's good. Well, the bad, when I say there's good and bad, the bad is they still haven't understood the message that the tariffs, that's not a reason for the market to plummet and for everybody to panic. Right. The tariffs, unless there was absolute certainty the tariffs are going to be a long-term thing and they're going to have that negative impact on the economy, that they're going to have that rising inflation result, then that's a different story. But you don't need to panic. And it appears, Art, that, and you've said this from the start, and I've been in agreement with you all along, it's just interesting to watch it unfold. The tariffs are to bring the other nations, the other countries to the table because it hasn't been fair trade for the good old US of A for a long time. And Donald Trump is, and people are saying this now more and more, Donald Trump is the president that is bringing this to the fore. Other presidents, for whatever reason, other administrations didn't take that bull by the horn. Frankly, President Trump's first administration didn't take that bull by the horns and say, hey, you know what, we need to get a more level playing field in terms of trade, fair trade. So we got about 3 minutes to wrap it up. What do you want to tell everybody right now and talk. You got 3 minutes to say,
I didn't talk enough, huh? Here, I'll throw one more nice ingredient into the tariff soup, okay?
Right.
And it is a soup, because, it is so fluid and it is all over.
Well, they're coming to the table is what is the other point.
Well, there's a good point, yeah, great point. So there's, let's say, 50 countries or whatever the number is that have come to the table to talk, okay? Now, the problem is it's not Mexico, it's not Canada, it's not Japan, it's not China, right? I just named off 4 of our top trading partners, right? It's 50, Vietnam came to the table, okay? Well, I'm not sure Vietnam is going to move our economic needle, right? Okay. But it's happening, and honestly, if I'm at the negotiation table, I don't want to be the last one to make a deal. Okay, I want to be. Might not want to be the first one, but I don't want to be the last one either. So, but the positive to this again, this tariff soup that you're saying is we're going into this on a strong economy.
Right.
Okay, so we're not heading into this. This economy was weak, and we had bad consumer spending, and we had bad inflation, we had high interest rates, we had bad unemployment. That's all horse of a different color, okay, you got a time when you throw a wrench into the works, right? So but we're going into this, and we even talk about current inflation. We got some great inflation numbers here in the last week. I think they were looking for 2.8%, and we came in at like 2.4.
Right.
The unemployment numbers were way stronger, or the employment numbers were way stronger than expected. The consumer sentiment and consumer confidence obviously has taken a hit, but that's not a surprise because you see how people are talking. It's painfully obvious that people are scared.
We hear it.
Yeah. But guess what? It's not showing up on the fact they're actually, I think their spending actually increased by 0.8%.
Wow.
Last month. So they're not happy, but guess what? They're still spending money, at least up to this point anyway. So I think I take that as another positive, that at least we're going into this, whether it's a short-term thing or a long-term thing, on a strong economy. So I'm not sure how long I just talked, but I think
3 minutes.
Well, and I'll just hit it one more time.
Yeah.
I can't guarantee you that the market's not going to drop another 5 or 10%. I can't guarantee you anything. But I do know that, I've been using this as an example. Like, if I went to Walmart and bought a pair of pants for 20% off yesterday, I'm not going to be upset if they're 25 or 30% off today. Okay? Right. If I can go and buy stocks and they're down 20%, then I'm a happy camper. Okay? I just picked up some deals. It's nobody likes to see their portfolios drop, but if I can pick up some deals and I end up better off in the long run, or my clients end up better off in the long run because we picked up those deals, that just means their portfolios come back even faster than what they went down. So again, I'll still stick with what we talked about in our special report. Just be calm. Okay, it's gonna be okay. This is not the end of the world, and I can't tell you how many people, thank goodness not clients, but how many people just talk about like this is doomsday. This is going to be really bad. And, when people say to me things like, "I don't want to lose all my money," it's like this is not we've been through a lot worse, and nobody lost all their money unless they panicked and did something not as smart as they could have done. Let's put it that way. So.
Well, perfect. Okay. Stay calm.
There you go.
Those are the 2 words.
Maybe we'll get t-shirts.
Stay calm. Do not panic. Stay calm and do not panic, because on the 29th of April, we'll be back with another edition of Taking Stock. Yeah. We're still going to be here. There's still going to be money in your bank account. We just don't know how much.
Yeah. If I could tell you that, it'd be a different story.
Well, Art Jarvis, thank you for some more insightful commentary and some calming words.
My pleasure, and as always, I appreciate your time.
Look forward to the next time. So we'll be back with another edition of Taking Stock, again on Tuesday, April the 29th. For now, that's all.
Sounds good. Take care.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.